Steve Peterson here with Infinity Investments, and welcome to our channel where we talk all things commercial and investment real estate. And in today's video, we're talking about investing into distressed commercial real estate during times of hyperinflation. Today is October, 12th, 2022. I would say we're in hyperinflationary times, right? I'll also say we're in a recession, but they're not stating that as of yet, but we're pretty much in there. So how do you make money during these times? And I would venture to say, actually, there's probably more money to be made during these times than in times like 2021, when there's easy money out there and deals are just getting done. But a lot of equity and real wealth is not being made because people are overpaying for assets. All right. So now is time where you can really ramp up, because there are bargains beginning now. And they're beginning to be more of them. Right. So there's three things that I think are very important as we're talking about buying into commercial real estate during these hyperinflationary times, and particularly distressed. So the number one thing, you've got to find a problem that you can solve. All right. Everybody has a niche, and everybody, you might listen to a bunch of people on the internet or go to a bunch of classes, and you might be able to do mobile homes or apartment buildings or self-storage, retail, flip houses, whatever it is that you might do. But you've got to find something, a problem that you can solve, right? So I'm in the apartment building business, and I've been there pretty much my whole life as an adult. And what I can see is there's a bunch of buildings where people have not paid rent, especially in the Bay Area, right? The owners have to pay mortgage, tenants have not paid rent. That's a problem, all right? I track foreclosures. I started the company in 2009 in the foreclosure crisis. So that's part of what we do. The defaults are up pretty significantly for commercial real estate, but also for residential real estate here in the Bay Area. I would venture to say throughout the state of California and throughout the rest of the country, because we're in a shift, right? But particularly here in the Bay Area because of the rental laws, and you cannot evict people in the Alameda County for lack of payment of rent, right? And so that's starting to stack up some issues. So there's a bunch of problems out there. You got to be able to find a way to solve it. Now, that also might mean that someone bought a property recently, maybe they're over leveraged, and maybe their property is worth less than the loan amount. I talked to two sellers this week alone where I quoted them, hey, I think I can sell your building for X. And they both said to me, well, that's not going to work because I paid Y, and Y is more than X, right? Which would mean they would be either a short sale, not a short sale if they put money down, but they would take a loss, right? That they're not trying to do that. But in situations like this, there's always a solution, right? And if you know how to create that solution or find that solution, that could be your way to acquiring a great asset. Give you an example. Say somebody out there bought a property, let's say it's a 10-unit building, and say they bought that property for $2.5 million, and they have a, let's just say, $1.7 million loan, right? And you come along and the property's not worth 2.5 anymore, maybe it's worth 2.2. Right? But this person needs to sell, and they're in the bind. They don't want to lose money, but they kind of need to sell or want to sell. One thing you could do is assume their mortgage, which is probably in the 3% range. And maybe you could even then maybe afford to pay them their price, assume their mortgage, have them carry a little bit of finance, and you put a little bit of money down. And maybe for you, that's a way you can solve a problem that the seller has. You can get in with a mortgage that's half of what the interest rate, that's half of what the market is doing, and you can acquire a property with low money down, right? That's just an example of how you can get in the game and solve a problem. So number one is you got to solve a problem or find a problem that you can solve. Everybody don't have the same skill sets. You might have a particular skill set, so you got to figure out what you can do to solve that problem. Now, number two thing, all right, you got to run your numbers when you're analyzing properties. You have to figure that you're going to have some expense growth. Whatever the income and expense, you got to figure that expenses are going to go up, right? And so when we're negotiating with deals, we're always going to say, hey, here's the projected income and expenses. I've got to put a premium. That premium we're using right now in my office, 20 to 25% on the expense numbers. Especially utilities, right? Things like property taxes and are pretty flat, but and management pretty flat, but things like utilities, insurance, by the way, insurance costs are way up. All those things are going up. So you have to budget for that. Now, the opportunity is When you budgeting for it and you can show the sellers, hey, this is what we're dealing with. So, now therefore I can't pay your price, or I have to pay this price. That gives you not just leverage in the negotiation, but actually you're building rapport with that person because you're showing them the reality of the situation. You're just not, hey, I'm lowballing you on your price. I'm able to share with you the numbers that we have to deal with that maybe you as a seller don't have to deal with, but if you're going to sell it, anyone that's going to buy it's going to have to deal with, right? So it's just having that understanding of that expenses are going to go up, right? And using that to help you to make a deal work. Not just complaining about all the expenses going up, but use it to your advantage, right? And the third thing is how you're going to invest in commercial real estate, distressed commercial real estate, is to structure creative financing or group investment deals into these projects. There is a lot of capital on the sidelines. Just because the interest rates are up, understand they've printed 43% of the US dollars in the last couple of years. It's a lot of dollars out there, but the dollars are scared and the dollars are looking for yield. So what you've got to do is find ways, and some of those dollars are in the form of seller's equity. Use creative financing and group investing to your advantage to acquire these properties, and you're able to do that and tell people who might be investors, hey, this is an excellent deal, distressed property, we're gonna make a lot of money. Or Mr. and Mrs. Seller, hey, it's a tough time out here. Why don't you use some of your equity to help finance this project so we can get it done? So I hope these 3 points help you out. I hope you utilize this in your investing, and I hope that you're finding ways how to be even more profitable, particularly in distressed properties, finding problems and solving them during this hyperinflationary time. Hope it helps. If you do, like, subscribe, share to the next video. Peace.